Welcome to the IFRS for SMEs technical series. Hello, my name is Calverwell and I help SMEs apply accounting standards to improve reporting, strengthen compliance, and build credibility with banks, investors, and partners. In this first session, we'll cover the foundation, what IFRS for SMEs is, why it exists, who applies it, how it differs from IFRS, and why it matters for Zimbabwean businesses. The IFRS for SMEs is a set of accounting standards issued by the International Accounting Standards Board. It provides rules for how businesses record transactions, measure assets and liabilities, and present their financial statements. It is meant for small and medium-sized entities without public accountability. That means businesses that don't have shares listed on a stock exchange, don't issue debt to the public, and don't hold money for other people like banks or insurers. Full IFRS is written for big listed companies. It is detailed, expensive to apply, and requires a lot of disclosures. For SMEs, this level of complexity is not practical. The IFRS for SMEs was created to simplify the process. It allows smaller businesses to prepare financial statements that are clear, reliable, and comparable without being weighted down by unnecessary detail. In Zimbabwe, the Companies and Other Business Entities Act requires SMEs that prepare general purpose financial statements to follow IFRS for SMEs. This applies to family businesses, exporters, professional firms, and even subsidiaries of listed companies, provided they themselves are not publicly traded and are not publicly accountable. Some key differences include less disclosure. The notes to the accounts are shorter and easier to prepare. Financial instruments, fewer categories, with simpler accounting. Revenue, the principles are aligned with international practice, but the disclosures are lighter. These adjustments make it easier for SMEs to comply while still producing financials that can be trusted. The challenges in our operating environment are unique, ranging from the lack of exchangeability of the local currency, the need for inflation-adjusted reports. These often make faithful presentation difficult, but the standard directly addresses some of these problem areas, making compliance both more practical and more valuable for Zimbabwean SMEs. This standard is more than a rule book. It is a tool for growth. Banks rely on IFRS compliant statements to approve loans. Investors are more confident when numbers follow a global standard. Tax authorities are less likely to raise disputes if the reporting is consistent. And businesses gain credibility when competing in regional and international markets. Put simply, the IFRS for SMEs builds trust, and trust is what opens doors to finance, investment, and partnerships. IFRS for SMEs is not about smaller companies doing less. It is about giving businesses a framework that balances simplicity with reliability. For Zimbabwean SMEs, using this standard is a step towards stronger governance, easier access to capital, and long-term growth. Stay tuned for the next video where we explore how an SME can choose accounting policies and estimates and deal with errors.